And good afternoon. We're doing it live right here in the 4 o'clock hour, doing more at 4 in the afternoon. It's Mottek On Money right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money live on the air, 790 KBC, streaming live online worldwide at kbc.com. And yes, the on-demand Mottek On Money podcast at kbc.com, Apple, iTunes, YouTube, and all your favorite podcast platforms. Another mixed finish today. It's been a sluggish start to the second quarter of 2024. Stocks finishing mixed today as investors weighed the latest comments from Fed Chairman Jerome Powell against stronger than expected economic reports and suggesting the need for higher for longer interest rates. Gold at record highs, silver at a 2-year high. I'll talk precious metals later this hour with Barry Stuppler, precious metals and rare coin expert based right here in Southern California. The Dow coming in for a closing loss of 43 points. Its third straight down day on this third day of the second quarter of the year. The S&P 500 managed a closing gain of 6 points, its first advance in 3 trading days, and the Nasdaq ended higher by 37 points. We continue to follow the unfolding tragedy in Taiwan. At least 9 people killed and more than 900 injured after Taiwan's biggest earthquake in 25 years. Rocking Taiwan today during morning rush hour, prompting authorities there to issue tsunami warnings. Massive landslides triggered and buildings were left tilting at precarious angles after the 7.2 magnitude quake, which struck just offshore at around 8 a.m. local time in Taiwan. I'll talk about this with China expert Gordon Chang, the author of The Coming Collapse of China and the Great U.S.-China Tech War. We're watching videos showing people experiencing violent shaking all across Taiwan. There appears to be extensive damage to buildings and infrastructure there. We'll bring you the very latest reports on this. The price of oil up for the 4th session in a row, finding support after the latest news showed a large drop in gasoline inventories and solid fuel demand ahead of the start of the summer driving season already. Crude oil also has been moving higher this week by fears of a wider Middle East conflict after Iran vowed retaliation for an Israeli strike on Iran's embassy in Syria that killed a top Iranian general as well as others. And, of course, the Israel-Hamas war continues. We see the price of oil now at a new high point of the year at $85.43 a barrel. Brent crude in London, the international benchmark, moving higher by 43 cents to $89.35 a barrel, the highest for both since October 27th last year. By the way, only 2 of the S&P 500's 11 sectors are trading higher this week, and both are on track to hit notable new highs. Energy stocks on track for their first record close since 2014. EV maker Fisker says it was withdrawing its financial guidance for this year as the embattled EV maker continues to seek alternatives to keep itself in business. According to MarketWatch, the company said it continues to evaluate strategic alternatives, which could include restructuring debt or equity raises, debt refinancing, asset sales, and other options. This according to a filing with securities regulators. Amazon also making news today, trimming hundreds of jobs from its AWS cloud computing business in its latest round of layoffs aimed at slashing costs. Amazon shares moving about 1% higher. Joining us live now on Your Money, Markets, the Economy, and the Whole Works this afternoon, Ken Winans, president of Winans Investments, author of Investment Atlas 1 and 2, market historian, and Forbes magazine contributor. Ken, thank you very much for taking the call here this afternoon.
Well, Frank, my pleasure, and it's always fun to talk right after we get done with the earnings season, so to speak, and certainly the first quarter for people in my line of work as an investment manager. It's a bit like the award ceremonies in Hollywood. You like to see where you stand up in the stacking and the ranking, so to speak. But, you know, the one other thing that I would bring up that is unusual about everything you just talked about the market seems, very sluggish right now. All day today in my office, I heard continued phone calls from clients who obviously did very, very well in the markets over the last, let's say, 15 months, and they needed money to pay their taxes. So I think you're seeing net money being pulled out of investments in order to facilitate their tax bills coming due early next week. So that's one factor. And then I'm also just going to bring up, just to parrot what you had said about oil. Yes, it is amazing the tear that oil stocks, oil commodities have been on. And it's just to keep in mind that seasonally speaking, April has been a very, very, very strong month for crude oil, or as we call in commodities, light crude. 65% of the time since 2000, oil has gone up on average 3.7%. So unfortunately, and I just filled my car up today too, and I couldn't believe what the price at the pump was. But unfortunately, I think we are going to have more pain as we go through the month from that standpoint.
Did you fill up here in California or in Nevada?
I'm actually,
Big difference.
I'm filling up. Yeah, oh, there's a huge difference. It's about $1.80 difference, and it's all tax. No, very, very shortly I will be filling up my car most of the time in Nevada going forward. But Frank, the other just important to also keep in mind, you talked about the shortage in gas, especially in California. We have these unusual fuel mixtures. They're environmental in their nature, and they're mandated by the state. And unfortunately, most of the refineries in California do not refine that fuel. So you also have to throw into the mix the transportation cost to get that fuel out to California. So it's very, very convoluted when you're talking about, the end gas prices anywhere in California.
Right, we're looking at $5.18, the average price for regular gas here in Los Angeles right now. Premium averaging $5.53 a gallon, and diesel up there at $5.45 a gallon on average. This as the price of oil is at the highest we've seen since last October, following the Hamas terror attack on Israel and the upheaval we've seen since then in the Middle East. So all of a sudden, oil stocks, the highest, how is this even possible? The highest seen since 2014. So that is big news. Anything that's getting your attention among the oil names now?
Absolutely. I would take a good hard look at Imperial Oil, symbol IP, and Marathon Oil, symbol MRO. I track 42 different oil stocks daily, but those two in particular, because of the kind of business that they're in, they're not big names. I mean, certainly we all know the big names, but certainly one of the reasons you have me on the show is to give some new ideas. And those two in particular are very, very strong when I look at the entire group. And then last but not least, I mean, you could even just buy an oil ETF, symbol like XLE, which is basically an ETF for oil stocks. But one of the things that I think it's a theme that people need to think about, and I brought it up, earlier this year. Tech stocks had been the lead dog in the pack for, over a year now. I mean, the dominant in almost every sector. I'm seeing there being weakness now, whether it's news in the headline about, antitrust or any of these things. But these other groups are beginning to outperform on a quarter-to-quarter and even on a month-to-month basis, oil being one of them. The other one, and I'll talk about in a moment, is real estate. Real estate sector has been on a tear, and that's in spite of the fact rates are not going to be coming down very soon. So I think that the number one message I'd like to get across today to everybody, now that you're done with the first quarter, it's time to rebalance your portfolio for what the rest of this year and probably for the first part of 2025 are going to look at. And the point is, I think you're going to find there are some names that might actually perform better than some of your favorite tech stocks.
On the air live with money manager Ken Winans. And Ken, we have to talk about this for a moment here. The biggest earthquake to hit Taiwan in 25 years, and it looks like it's already having an economic impact. I'll be discussing this in detail with Gordon Chang, the China expert, later this hour. But the Taiwan earthquake has halted semiconductor chip making in Taiwan. Of course, Taiwan semiconductor advanced chips production now at risk. What do you see happening here, given your market historian background and this kind of situation here where an entire industry is impacted by a natural disaster like this?
One of the things that's happened with Taiwan, and a lot of it's because of the threats over their many people believe a confrontation with China over sovereignty. Many of those companies have been reallocating their factories to other areas, such as South Korea, Japan, and even in Mexico. So, I mean, the good news is that at least many of these companies, like Taiwan Semiconductor, they have plants everywhere. So, yes, it is going to impact things, but these companies are ran by some very, very sharp people who have figured out logistically what they need to do to move things around. So I don't think the impact is going to be that bad, but I will tell you this, Frank, that I'm actually going to switch this a little bit. I'm very concerned as somebody who's lived in California my entire life, well, most of my life. that here we are in an earthquake area. You have something like this hit Taiwan, and we have reports coming out of the state capital that the emergency fund is drained and gone to zero. And yet we have the highest taxes in the land. I would hope that this would be a canary in the coal mine for our leaders, especially in an election year, that they better figure out a way that we need to start preparing for these kind of natural disasters, and they do hit, and we have to be prepared for it. But right now, clearly, the people who represent all of us in Sacramento are not paying attention to this, and I think it's our chance to say, look at what happened here. We're not prepared. What are you going to do to get us on track?
Yeah, of course, the last big earthquake here happened in 1994, the Northridge earthquake, 30 years ago. So quite a reminder here that it's been a while. But this situation in Taiwan, obviously the assessments continuing here, and we understand some workers are stranded in quarries and all kinds of situations there following this epic earthquake there in Taiwan. So we'll continue to follow that very closely. Gold, record high. Silver at a 2-year high. What about the precious metals here?
You know, you're Frank. You and I are on the same page as usual. I mean, I talked earlier. I mean, you asked me, I think back in January or February, what I thought was going to happen with the metals, and back then it was the battle between crypto and gold. And boy, oh boy, who would have ever guessed that gold would be on the tear, and certainly that silver has had the rebound that it's had. Again, putting history in the driver's seat. April and typically through the summer, it is a good time to be in gold. In fact, since 2000, gold is up on average 1% in the month of April, 61% of the time. So, the old adage, trend is your friend. I think that the metal play is going to continue to play out, obviously for geopolitical reasons, certainly with what happened in Taiwan. But I just get the sense in talking with people, they are very concerned about the geopolitical risks happening around the world, and they believe in the comfort of having some gold in their portfolio. So people who have typically not been what I would call gold bugs, or people who even have thought about where they're going to store the gold, are suddenly paying attention to the idea of having some gold somewhere that is in a safe that they can get access to very quickly. So I do think the trend, this is a breakout pattern. I'm a technician, and this is a serious breakout on high volume. You don't want to bet against this. This is not the kind of thing you'd want to try to sell or short into. So I would look at gold, and certainly on the ETF side, look at GLD, which you can stick in any stock or any IRA, or any account, including an IRA. You could put it in there very easily, and it does not kick out a K1. It's a standard tax form. But Frank, the other area, and I mentioned it earlier, and I think we have to go back to this, and I find this of everything we talked about today, this to me is the most interesting. We have interest rates that are high. They're going to continue to be relatively high, as Jerome Powell said, for the foreseeable future. Yet you have the real estate sector, which within the S&P 500, this is a very dominant sector, which includes the home builders, the building materials companies, and it's on a tear. And even after the downgrade yesterday on the home builders from a couple of the big investment firms, those stocks roared right back today, and that's in a lackluster market. So again, just like it is with energy, where I find people are underinvested in energy plays, they are extremely underinvested in anything with real estate. And I've talked before about the home builders, but I would like to particularly focus today on the building materials companies. And some of the names that caught, and these are probably some names many of you have never heard of before. One is Masco, symbol MAS. Another one is Quanex, symbol NX. And last but not least, this one has been absolutely amazing. It's called Flex Steel, FLXS. So again, names that, part of it is to find those names that most people wouldn't know anything about, except maybe the research analysts at Warren Buffett's Berkshire Hathaway, which are always trained to find value. But there is something about this sector that is extremely resilient, and I would encourage people to take a good hard look at it, especially as we're going into the summer season when building really picks up.
On there live with money manager Ken Winans, and now I've been seeing headlines like this lately, gold at record highs, should you buy? And this is human nature. When we had that big rally in cryptos, Bitcoin hitting record highs, that's when gets attention and people start piling in. Silver had been quiet for quite some time, and now suddenly it's at a 2-year high at 27 and change. Gold at around, 22.50 here, or taking off here. So what about that psychology of all of a sudden people pile in at record highs here? And do you think both gold and silver are going higher at this point?
I do think they're going higher, but you raise an extremely important point, and this is a bit of just trading tactics that people should learn. Look, when something has had a breakout like this, and let's say you have absolutely no exposure to it at all, maybe what you will want to consider doing is, instead of buying what you would consider a full position in these metals, buy a partial position, and then if you do get a temporary pullback, you can add to it at that point in time. But no, I agree with you, Frank. I don't think this is the time to basically be betting a large bet on gold and silver. Everything has a tendency to have temporary pullbacks as other people take profits. I would look for those pullbacks, but the trend is definitely your friend on this, and I wouldn't necessarily look for a huge correction. I would simply want to basically, make an effort to have this in your portfolio, start building an initial position, and try to get it to be rather large, maybe between now before you go into the summer. One other quick thing about gold, a lot of it is, as you talked about, it's also a headline type play. If for some reason the Federal Reserve suddenly came out and said inflation is dropping, we're going to move faster on lowering rates, I don't necessarily think gold would act the same way, or if things begin to calm down in the world. But let's just keep in mind, there were a lot of people who bought gold right as the Russian-Ukraine war started. It went up, and then it did pull back, and then it resumed sometime later. So you're 100% right. Nothing goes straight up forever. As we learned with crypto, you need to be very careful.
And P.S., I'm looking at gold up $6 and change to $2,300, $21.20. Gold hitting record highs, and we'll talk more about this later this hour. Now, getting back to the wild crypto scene here, Bitcoin back to around 66K here, Ethereum at around 33, and Doge, which also has seen a big run up. Let's bring that one up, which we quote because it's kind of fun to say Doge, 18 cents here at the moment, Ken, for no other reason. What about, we talked to the biggest fans here and the harshest critics of crypto. What are your thoughts on this one now?
I just went through a certification course for crypto. As you know, I have a commodity background. I also have a stock and bond background. And so I wanted to learn more about crypto. And I figured that with the SEC giving their blessing to having an exchange-traded fund in this new area, part of my job as a money manager is to learn and try to figure out ways. What I can tell you is that, number one, when I run my analysis where I try to find correlation with crypto and currencies, there's none. What crypto, the very, very strong relationship it has is to the NASDAQ. And I've ran that since Bitcoin has been public, and Ethereum has not been out as long, but it's the same relationship. So I think you have to, one, accept it is a digital asset, but it's not a currency. And as we have seen, it's had a massive pullback while the dollar has been generally very stable and gold's taken off. So clearly it doesn't act like those other things. Now, I would say that with the pullback in crypto, for people who have said, I want this in my portfolio, especially with these new ETFs, you should be considering buying the pullback. This is the time you do want to start stepping and look at things. But as you brought up, Frank, it had that emotional run to hit the new high. That's sucked in a lot of new money. And unfortunately, as we found out, these people have learned a hard lesson that this is an extremely volatile asset, and you need to be very careful. And not to forget, it is a commodity. Commodities by their nature, they give and they take away. And when they take away, they take it away fast. So you need to be very careful.
Goes up and it goes down. Ken Winans, President, Winans Investments, author of Investment Atlas 1 and 2, Forbes magazine contributor, of course, a fantastic contributor to this program for many years. Ken, thank you very much for taking the call here live with us on Mottek On Money on 790 KBC. Friends, people like you and me have our ear to the ground on all things business. We like to be informed and indeed well prepared. And as important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. It's that simple. Thinking ahead serves us well. And even still, we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident. It's not their fault. That's why I encourage you to put my friend, Attorney Clark Fielding's number in your phone. That number is 833 88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents. You name it, 833-88-SHARK. That's the number, 833-88-SHARK. Or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KBC. Gold. It's a new shine at record highs. Moving higher again today. Right now, we're looking up around $6 here at $2,321.20 an ounce. Silver at a nearly 3-year high now. All of a sudden above $27 an ounce, up to $27.30, up 24 cents. I'll talk about the precious metals in great detail here shortly with Barry STUPPLER, precious metals and rare coin expert based here in Southern California. We've also seen oil hit a new high for the year today as the upheaval continues around the world. Oil right now above $85, nearly $86 a barrel in New York. Mixed finish for the stock market today. The Dow down for the third day in a row so far on this third trading day of 2024, the second quarter of 2024, I should say, after a blockbuster first quarter. Money coming off the table in the industrial sector here with the Dow down 43 points at 39,127. The S&P 500 up 6 at 5211. The NASDAQ managed a closing gain of 37 points at 16,277. Bond yields spiking again. The yield in the 10-year note is back up to 4.35%. Taking a look at the cryptos here, we see a Bitcoin at the moment up 300 at 66,172. Ethereum up 10 at 3,318, and Doge at 18 cents. And now the latest news for you here in 790 KABC. Mottek On Money continues here in 790 KABC. We are doing it live in the 4 o'clock hour, doing more at 4 in 2024. Mottek On Money live on the air here at 790 KABC, streaming live online worldwide at KBC.com and the on-demand Mottek On Money podcast. KBC.com, Apple, iTunes, YouTube, and all your favorite podcast platforms. So you missed any of our conversation with money manager Ken WINANS, for example, on what's going on with the markets and the economy. You can pull it up later when the show is done. We got the Mottek On Money podcast for you on demand. Meanwhile, gold, a big story, hitting record highs again today, hitting as high as $2,322.70 an ounce. Gold is up, 13% just in the last 3 months, up 15% over the past year. The low point over the past year was $1,823.50 an ounce. Gold taking on a new shine for a variety of reasons. This at a time when we're told inflation is easing, gold suddenly hitting a record high. It's, of course, considered an inflation hedge. Silver coming along for the ride now as well. Silver is up to $27.30 an ounce, and that's the highest we've seen in nearly 3 years now. Silver, of course, well off its all-time high, which was around $50 an ounce some years ago. We see silver up 24 cents at $27.30. Other precious metals have been getting a boost lately. This as the stock market has had a sluggish start to the second quarter of 2024 following that record-shattering first quarter of this year. The Dow today coming in for a closing loss of 43 points at 39,127. The S&P 500 up 6 at 5,211. And the NASDAQ moved up 37 points to settle at 16,277. All this happening as bond yields continue to edge higher. The yield in the 10-year note now at 4.35%. The other big story we're watching, of course, the price of oil hitting a new high for the year. Right now up 21 cents at $85.64 a barrel in New York, approaching $90 in London. That's the international benchmark. Brent crude in London moving higher. All of this, of course, as the upheaval in the Middle East continues. We're watching, of course, the latest developments involving Syria, Iran, and Israel as well. Of course, the Israeli war against Hamas continues following the terror attack on Israel last October. Crude has been boosted this week by fears of a wider Middle East conflict after Iran vowed retaliation for an Israeli strike on Iran's embassy in Syria that killed a top Iranian general as well as others. Oil futures up for the fourth day in a row, finding support on a report showing a Large drop in U.S. gas inventories and solid fuel demand ahead of the start of the summer driving season. Brent crude in London, by the way, up 43 cents today to 89.35 a barrel. So we're seeing both Brent crude in London and the West Texas Intermediate crude traded in New York, both at the highest we've seen since last October, following the Hamas terror attack on Israel on October 7th. Gas prices moving up here in Los Angeles, $5.18. Now the average price for regular gas in the L.A. Long Beach area, $5.53 now. The average price for premium, both, I believe, about 20 to 30 cents a gallon higher than where we were just about a month or so ago. And the diesel now all the way up to $5.45 a gallon. That also has been edging higher, impacting truckers out there. And, of course, diesel's the lifeblood of the global economy. And when that moves up, things get more expensive. So, if anything, there is upward pressure on inflation once again. And perhaps that's one of the reasons why we're seeing gold as high as it is today, hitting a record high of $2,322.70 an ounce. Silver, again, $27.30 an ounce, the highest we've seen in nearly 3 years. And we'll get some more information about the other precious metals here coming up here very shortly. And in the meantime, cryptos have pulled back from their record highs. We see Bitcoin at the moment at $66,084, up about $200 right now per Bitcoin. Of course, Bitcoin went on a tear in the first quarter of this year, hitting an all-time high. It's still up, by the way, about 136% over the past year. And since the start of this year, Bitcoin is up 57%, so eye-popping gains for Bitcoin. It got as high as 73,798. That was the high point not too long ago, just within the last month, but has now pulled back to 66,112 here at last check. In the meantime, Ethereum is catching a buzz as well. Well off its all-time high right now of $6 at $3,315 per Ethereum. And let's bring up good old Doge. That's also well off its all-time high, but it's been moving higher, had been above 20 cents recently, right now at 18 cents. Some of the oil names that Ken Winans mentioned, getting back to oil for just a moment, he mentioned IP and MRO, which is Marathon Oil. Let me see what we have here. See if we can bring up some of the oil names here, which have been moving higher. As a matter of fact, one report said that the oil stocks have been hitting the highest, blowing past the previous record high set in 2014. So Marathon Oil, let's bring that one up, is certainly one of the big oil names that he had mentioned just a few moments ago, trading up 71 cents today to $29.50 per share. BP, the British oil conglomerate, let's see, trading right now at $38.81 after rising 16 cents today. Of course, the biggest one, ExxonMobil, here in the U.S., up 2 cents today at $119 and change. All right, Barry Stuppler with us, precious metals expert, rare coin expert, former president of the American Numismatic Association, founder of Mint State Gold based in Woodland Hills. Barry, thank you very much for joining us here. We played the song Goldfinger a few moments ago. I don't know if you heard it, but gold certainly shining at the moment at record highs today. Give us an update here on what's happening in the precious metals.
When I did the last interview with you, it was March 20th, and gold is just about to break 2,200. And if you remember right, I said if it breaks 2,200, it's probably got a clear path to 2,300, and it did it in 2 weeks. It actually broke 2,300 today. So we're looking at gold with an exceptional amount of buying because of the geopolitical situation, because of the consideration of debt, and even on some of the financial channels on TV today, I was seeing a lot of New York financiers talking about how they're doubling their gold position. So the buying is coming in, and we are seeing a lot of attention to gold right now because of a number of issues, including stepping up in central bank buying. So the gold is just flying off the shelves, and even the amount of interest in gold. We do a daily blog from Mint State Gold every day, and normally it's about 1,000 subscribers that go online and look at our blog. It's over 7,000 today. So we're seeing a lot more interest, which is great. And a lot of our clients who bought gold up to 30, 40 years ago are tickled pink.
Yeah. Well, Barry, let me ask you, we have a limited time here now, but where do you see gold go from here?
Well, like I said before, I was looking for 2,400 by year end. I might necessarily update that because of the amount of buying. So also, not only is it gold, it's silver. Silver is up $2 in the last 2 days. Unbelievable. Silver finally picked up the mantle and started running with gold. So now we've got silver up. I think I see gold over 2,400 by the end of the year, and silver could easily be $30. So we're heading in the right direction.
Yep, so silver well off its all-time high, which we haven't seen in quite some time, but silver at last check above $27 an ounce, the highest we've seen in nearly 3 years here.
Yeah, there's just a lot of buying out there. Silver is definitely underpriced. With a silver to gold ratio of 85 to 1, silver is definitely underpriced considering where the price of gold is. A lot of other metals like platinum and palladium are not doing so well, but silver and gold are leading the pack right now, and the buyers are just rolling in.
Yeah, I'm sure you've been busy, Barry, so thank you very much for taking the time to come to the line here, and hopefully we'll get a chance to talk some more again very soon. That is Barry Stuppler, founder of Mint State Gold, based in Woodland Hills. Thank you very much for joining us live here this afternoon.
My pleasure, Frank. Thank you for calling.
Thank you. Thanks very much, and right out to the freeways now on 790 KABC. Mottek On Money continues here, 790 KABC. Damage assessment continues in Taiwan following the biggest earthquake there in 25 years, rocking the island during the morning rush hour, prompting authorities there to issue tsunami warnings. At least 9 people dead, more than 900 injured. Following that shaker today in Taiwan, massive landslides triggered. Buildings left tilting at precarious angles after the 7.2 magnitude quake, which struck just offshore Taiwan at 8 a.m. local time, Taiwan. Meanwhile, dozens of Chinese warplanes and naval ships reported to be around Taiwan this week following this much-publicized conversation between President Biden and China's leader. Let's bring in our China expert now, Gordon Chang, China expert and author of The Coming Collapse of China, The Great U.S.-China Tech War, and on X, formerly known as Twitter, at Gordon G. Chang. Gordon Chang, thank you very much for coming to the line. First of all, give us your reaction to this natural disaster there in Taiwan, the biggest earthquake in 25 years, and the impact that we're seeing so far.
I think the most significant thing is, although there were 9 deaths, I think the toll would have been much higher. Taiwan learned a lot from the last quake, which was a quarter century ago, before the turn of the century. And so their building codes have been updated, and so therefore the damage, although considerable, because it was a 7.4 or a 7.5 quake, I think was a lot less than you would have otherwise expected.
On there live with China expert Gordon Chang, and now there's concern about the potential economic fallout of this with the Taiwan semiconductor and other industries there in Taiwan impacted. What kind of impact do you expect on the global economy based on what we know so far?
What we know so far is that TSMC, Taiwan Semiconductor Manufacturing Company, which makes 92% of the world's most sophisticated semiconductors, seems to be up and running. So I don't think customers are going to feel it. But of course, what this does highlight is that there is maximum vulnerability to the global economy because so much production is centered in one company. And that company has most of its facilities in a territory which is only 110 miles away from China, and China has threatened the use of force against Taiwan. So clearly the risk, or at least the potential risk, is there.
The other big story, of course, very concerning here. I know you've been following this very, very closely. Dozens of Chinese warplanes and Navy ships reported around Taiwan following that phone call between President Biden and the Chinese leader. What do we need to know about that?
The most important thing is what you just said, that that naval and air incursion, there was 30 planes, 9 ships, occurred after President Biden spoke with Xi Jinping on the phone on Tuesday. Xi Jinping, according to the Chinese readout, talked a lot about Taiwan during that conversation. That's also evident from the American readout. And really what it says is that deterrence has failed. Although we had this conversation, the Chinese then decided to really pressure Taiwan. The other thing about this is that, they had pressured Taiwan in the middle of February after the death of the 2 Chinese fishermen. Then they let Taiwan go, and they really went after the Philippines. Now they seem to have shifted their focus from the Philippines back to Taiwan China is probing throughout its periphery, and that means that they're looking for weakness, and that means they are ready to pounce.
We heard from the White House describing the conversation as candid and constructive. I guess all the Chinese state media also describing it that way. The conversation ranged from AI concerns to military communications. What about those AI concerns, and what do we need to know about that part?
I think the most important thing is we have warned China over any number of different things, including technology issues and specifically AI, but we've never really imposed that much in the way of cost across the board. And because of that, I don't think that this conversation between Biden and Xi was actually that productive from our point of view. The Chinese are just doing this to string things out. And what President Biden needs to do is make good on his warnings, to impose those costs on China and stop talking. If he does that, I think then we will get somewhere. But so far, Chinese behavior has deteriorated across the board, especially over the last 2 years. And so obviously, although Biden policies sound like they should work, they are actually, in fact, not working.
All of this ahead of the visit of Treasury Secretary Yellen, the former Fed chair, visiting China. She's scheduled to visit China after an American delegation, business delegation, met with the Chinese leader last week. What do you expect to come out of this meeting with the Treasury Secretary there in China?
Very little. Again, the Chinese are just delaying. I don't know what the Treasury Secretary can say now that she didn't say in July. And if she wasn't able to have the effect she wanted in July, it's because right now the Chinese, again, are just stringing her along. So, again, we need to start imposing those costs against Chinese banks, for instance, for laundering a lot of very dirty money. And that's within the Treasury Secretary's purview. The Chinese regime has made it very clear that they're going after foreign business in a very, very difficult way. They haven't relented after her July visit. I don't know, if this is going to really accomplish anything, except, of course, to give China more time to go after our companies in ways which are completely unacceptable.
Gordon Chang, thank you very much for, as always, covering all the important stories here as it relates to China. We do appreciate it. That is China expert Gordon Chang, China expert and author of a number of books on the subject. And we appreciate that. The author of The Coming Collapse of China, The Great U.S.-China Tech War, and big on X, formerly known as Twitter, at Gordon G. Chang. Thank you very much, Gordon, for taking the call this afternoon.
Thank you, Frank.
This is Mottek on Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be doing more at 4 tomorrow afternoon right here, Mottek on Money on 790 KBC.
The countdown is on for the 2024 NFL Draft, presented by Bud Light, live from Detroit, and you can attend in person for free.
Welcome to the NFL Draft.
See the next NFL stars and experience the ultimate NFL Fan Festival, featuring live concerts, interactive games, player autographs, and more. The NFL Draft, presented by Bud Light, April 25th through 27th. Visit NFL.com/draft access to register for free entry today.